Howdy, folks. It is Dr. Jeff Camarda reporting from fabulous Key West, where I'm celebrating my 21st wedding anniversary with my fabulous wife and partner, Kim Camarda. We were married Valentine's Day 2001. What a wonderful journey it's been. In any event, the special report is with respect to yesterday's tumult in the market and the fact that Chief Investment Officer Jonathan Camarda is busy reading the tea leaves to discern market directions and our next best moves. But I'm reading what he prepared, the remarks he prepared for me late last night. And depending on how day's action goes, there may be an update later on. And he says decliners yesterday had now outnumbered by more than 7-3 on issues going up on the New York Stock Exchange, with 77 stocks hitting new 52-week highs and 19 stocks hitting 52-week lows, while volume was relatively heavy. A lot of action, a lot of market participants. The major indices all finished significantly lower, following a volatile and active day of trading on Wall Street, with all eyes on inflation and rising treasury yields. The consumer price index and the core CPI both came in well above consensus estimates, pushing 8%, as I recall, reading the papers yesterday, as inflation remained red hot in January. The benchmark 10-year yield capped the crucial 2% for the first time in well over 2 years, with a 2-year yield also hitting a multi-year high. St. Louis Fed President Jim Bullard spooked the market when he called for mid-meeting rate hikes and a total of 1% increases in rates by June. And there's some speculation that the next hike will be a full half point, not a quarter point, as has been expected for a long time. Disney was up 3.4%, Coca-Cola about 5%, O'Reilly about 2.9%. They managed to buck the negative trend thanks to their bullish earnings, with the entertainment giants numbers really turning heads. Now, while all the key sectors closed the day lower due to the hawkish comments by St. Louis Fed President, cyclical issues remained relatively strong throughout the day, with materials, energy, financials holding up especially well, thanks to the increased. So they, it's obviously there's mixed information, and not everything goes up or down together, but certainly the plunge that we saw yesterday, a direct result of the market finally realizing what we predicted nearly a year and a half ago. That inflation, the actions of the central banks and other government participants and for other reasons really have driven the potential for significant inflation higher, which is not good for a lot of reasons, right? For a lot of reasons. It's recessionary, costs could keep goods going up, cost companies more money, for labor and other inputs, and it's not as profitable. So it's really not a good thing, but it looks to be accelerating as we had predicted. And the market's finally, I think, starting to appreciate that this may have a long-term impact, and stock prices, may go lower, significantly lower. And again, we're not there yet. Our long-term indicator has not gone bearish, and we watch that regularly. But it may. We're poised. So fortunately, we took large cash positions through December and January. It did not redeploy since the outlook was relatively murky, and we're very, very happy with the positions that we're in for you, our investors, and what our long-term and short-term game plan is based on the significant wealth threats we see for investors in the months and years ahead. So that's pretty much it. Again, sorry for my relatively disheveled appearance and then the poor quality of the video. I'm standing out in the balcony here trying to balance the lights. I want to give you some palm trees, but then you look at my face. Maybe that's a good thing, right? But I just wanted to, to touch and let you know that we are watching things and we are watching out for you. And for the nonce and hopefully for the weekend, this is Dr. Jeff Camarda signing off. Kimberly, how do I turn this darn thing off? Let's see. I don't see the dot. Go to the dots. Okay, here she is. Happy anniversary, baby. Just hang up. Bye, y'all.